Hello, everyone. Welcome to Monday, July 22nd's episode of Now, Next, Later. It's Jeremy Potter and Sasha Stair. Don't let my name in the corner deceive you. I am not Robbie Chrisman. Robert Chrisman III is in transit today, so I just jumped in to make sure that we had all the admin controls for Now, Next, Later that we needed. And we have the chat open. So if you're on, thank you for joining us. We had really great questions come in the chat last week. We would love that to continue, and we'll try to monitor that as we go. But Sasha, thank you again for being co-host of Now Next Later. How are you?
I'm doing well. How are you?
Excellent. Thank you. I had a question for you because I think this is true, but I wanted to confirm it. Are we headed to the same place for this Housing Wire event tomorrow?
Yes, I didn't realize you were going, but yes, we are.
Excellent. Well,
Although
good. I
I'm
will.
heading out after this call, so
Yeah,
get
same.
getting into Dallas tonight, and then yeah, got AI Summit tomorrow.
Seems like everybody we know had airport issues over the weekend, either Friday through the weekend. So I don't know that it'll be clear by the time we
Yeah,
get there, but hopefully we both get into Dallas tonight.
I got lucky actually. I left Rapid City on Friday to come home for the weekend here in Scottsdale. And both my trip from Rapid City to Dallas and Dallas to Phoenix were not only on time, but like no technical issues. So I don't know if systems just got up and running at the perfect time and I just like
Yep.
struck a luck chord. I also had to like go deposit a check into my business account when I got home, and Chase's systems came up 5 minutes before I walked in the door. So I think I was just like on a good luck train with technology outages being fixed and things being up and running.
Everything's coming up, Sasha. I like it.
Yeah,
Well,
exactly.
let's hope that continues.
I'll
Let's
rub it
hope
off
that
on you.
continues. So, for those joining us for the first time, one of the reasons we decided to call this show Now Next Later was to walk through how you think about transforming your business. A lot of people are looking for frameworks or strategies on looking at data, looking at technology, looking at consumer experience or user experience, and then also trying to predict, if I invest in any of that or more, what does it look like for the future? Am I just constantly investing? And so while there is the ever constant change in our industry, the idea is to give some framework to the big topics in this industry on a roadmap that you can actually address. Now, Next, Later is your roadmap for how you think about really big initiatives, innovations, ideas in the context of, what do I do today to get where I'm trying to go? And so today's topic, as you may have seen on LinkedIn, is same, but different: purchase versus refi. And the question that came up last week, we were chatting about data management, using data tools, using data integration technologies that either create new workflows or create new efficiencies. Ideally, we're all trying to lower costs here. And one of the questions that came up is, how should I think about my systems, workflows, data, consumer experience in the context of purchase versus refi? And for a long time, I think those two application workflows were very manual. You could rely on your MLO, your processor, to manage the different checklists for a purchase versus a refi. And if you brought it in as a loan officer, if it was your customer that you were refining, you could actually manage that with your team, with your operational staff, with your underwriters, to know, oh, on a purchase I have to do this, on a refi I can skip this. But as we've automated workflows, checklists, templates, when you select purchase from a dropdown, it can look very different from that point forward in your systems versus when you choose refi. So, are these two products different? Are they really different? What are we talking about? Is today's topic. So, one of the key questions, Sasha, we could start with is, do you know, or have you given any thought to trying to implement technology or treat technology as you're evaluating for whether or not you want to work with a certain partner differently for refi or for purchase? Any of the lenders you're talking to seem to be starting to think differently about these two? What's been your experience with thinking about the consumer experience or the technology experiences around these two transactions?
Yeah, it's a good question. I think at a high level, most people that I've talked to are not necessarily thinking about it. And I think if they are, it's more so like I think we touched on it last week. the technology that are out there that really look at key milestones in the process to capture that repeat business rather than lose a customer. But that's not necessarily solving for what you're referring to on the front end around really having an experience that is more consumer focused.
Mhm.
And I think we were talking a little bit about this before that, oftentimes companies will come in and pick like one piece of the puzzle that they want to try and fix from a technology standpoint. But I don't think we've made it far enough upstream to really properly create an experience, like you're saying, that is streamlined and truly puts the consumer at the heart of it for either, to be quite frank. And certainly lots to discuss on whether the two should be similar or in fact different and what that looks like. What are your thoughts?
Yeah, I think one of the things you just touched on that comes to mind for me is there was a big shift from a technology perspective a few years ago to microservices, how you have these you take a big engine like an AUS or a big engine like a data model or a credit model, and you start breaking out the components of it. So I know the way I was kind of trained to think about it when I was at Rocket Mortgage was IPAC, right? Income, property, assets, credit. Those were the engines. How do you unpack that? How do you, and pun intended, right? How do you take those and make those so that you can run income independently? You can run assets independently. You can run credit independently because you don't know where you're going to need to plug it in. And one of the things that's curious to me as I think through us talking about the now of what a lender has to deal with what they show to a consumer or an MLO or a referral source
Mhm.
is, are we really still thinking about it as these microservices that we're going to move around in a chronological timeline of the transaction, or was that a moment in time and we've already kind of moved past that relative to how especially day one certainty type solutions
Sure.
have come into play, and now it's just I'm running this up front as quickly as I can, so to speak, on whether or not it's a purchase or a refi. So that that microservices structure was the big talk. I would say probably 4 or 5 years ago. I don't know that that's still as top of mind, thanks to some of these other services and vendors that have come in and said, wait, we could just do that for you. Just plug in here.
Right. Yeah, I would agree with you. And like I said, I haven't heard lenders talk about it. And I think the market shifting obviously shifted focus too. So perhaps something that people were looking at one point and being more intentional about, and then it kind of just fell by the wayside given everything that we've had to call it pivot on in the last couple of years.
I think that pivot's a great point. So what I was thinking about was right now, my business depends on purchase referrals for the majority of the industry. And that referral usually comes in one of two ways. I'm doing digital brand marketing and it comes in through the web, or my referral sources. And the vast majority of mortgage companies are still in that referral business mindset. So right now I'm focused on purchase in a really big way, maybe some HELOC or HELOAN rollouts because I needed to do that. Um, how do you think about, or what advice could we kind of talk to that I got to be able to do that today, but I know that at some point I have referral, refinance business coming.
Yeah.
And I got to make decisions in this context of I have no idea when that is. Could be in September. It could be for 2 more years,
Yeah.
or anywhere in between those. And if you were kind of counseling somebody to think about what really should I be prioritizing now, it almost feels overwhelming to to think about like these two worlds and increasingly whether or not they're different enough to justify completely different workflows.
Yeah, it's a good question. And I think you could probably talk to more the product and workflow side. When I think about technologies that are out there, and I forget names of companies at times, so I apologize. Milestones is the one that comes to mind. So good job on the
Mhm.
marketing and branding because it's like you named it what it is.
That's right.
Where you have people saying, hey, let us start to put some additional, and again, this is like a catch 22, let's layer on more technology, right? But like let's layer on the technology so that you can start to think about the data that you already have, the customer base that you already have. And like, even if it's been a while since you've reached out, now's the time to do it because when rates do come down, we anticipate refi will go up. And even now, if people have significant debt consolidation, that they want to address, a 7-8% plus rate is still lower than what most people are carrying on credit cards and other debt. So, I think there are technologies like that that give you an opportunity to at least go in and have an ability to see that data and think about how you're going to reach out and either reinvent or recreate those relationships, and
Yeah.
then hopefully nurture them longer term go forward so that you don't have to go back and do this again. I'm not as familiar like on the workflow upfront side, so maybe you have more thoughts there.
The way that the way that I was thinking about this, if I was approaching what is similar, same but different, what is the same is, am I able to build something where I'm getting, let's use the income example from earlier, am I able to get the income from the same spot every time,
Yeah.
whether I'm doing a pre-approval, whether I'm doing a refinance in application, or whether I'm doing a final approval for a pre-approval? Am I able to create it so that that is the same path, that is the same engine, and that is the same results to the same fields, no matter when I run it? And so that does lend itself to more that kind of micro engine style. I'm going to start making up words here because I think I'm not classically trained software developer. I am, however, trying to put words around like the logic
Yeah.
of, if I've got to confirm income and I use the same engine or the same data source each time, of course, you're going to have your outliers who maybe they don't want to share their bank password for the fastest integration to those big data aggregators. Maybe they only have PDFs to upload. So yeah, you're going to have your conveyor belt of income verification, and then you're going to have your exceptions that have to come off the conveyor belt. But can you build that in a way that it's accessible to your team at the right time, no matter where they are in either transaction? And I think that's the way I would be thinking about it for everything.
Yeah. Well, and you do have companies out there like Freeform, Finlock, or others who are not just thinking about how do I help a borrower get financially more literate and understand where they're at and how to clean up, whatever they need to in order to be in a better purchase or refi position, quite frankly. But also this concept, whether it'll take off or not, of having a token where it's like, hey, I've gotten some of this data and I have a borrower have power over saying you can leverage it, right? Company A, company B, so that you're not doing repeat. So there's some of this that's not just what you're talking about in the hands of the lender to go think about how do I be more efficient and streamline things I'm doing in either transaction, but also that the borrower is ultimately going to have some hopefully power and say in as well.
Yeah, can I ask you more about that? As a, we'll ask you to play the role of the consumer in
Yeah.
this case. So if I'm a lender and I want to use, for lack of a better way to think about it, I want to outsource some of the work of income verification.
Mhm.
Okay. And we'll just use income because that's the one we've been using this for this show so far. I want to
Sure.
outsource some of that. So from a purchase perspective, I'm outsourcing it to FormFree, FinLocker, whatever sort of engine is doing some pre-qualification or pre-approval work. It's
Mhm.
giving the consumer some feedback. It's also telling me where they are in that process. So from a net new consumer perspective, from a I haven't done business with you yet perspective, this is kind of a way for lenders to outsource that. As a consumer, what are your expectations, I guess I would say, around a lender being able to work with you throughout that process? And would you subscribe to or join a program that basically said, as long as you keep refreshing this feed, you'll keep seeing real-time information as you shop?
Yeah.
I don't know how many lenders slash the service providers we mentioned to those lenders are thinking about it this way, but is that something you've seen or would be interested in, like wearing your consumer hat, that
Yeah.
would work? I guess is the better question.
No, it's a good question. I think for me personally, when I've purchased a home, it's been a pretty
Hmm.
straightforward process. When I've thought
Hmm.
about a refi, it's actually been more complicated. And I've wanted a lender to sit down and think of things more from like a be my financial advisor and help me consider the options and whether or not a cash out refi right now makes sense to pay off some student loans for our daughter, for instance, right?
Hmm. Hmm.
And so, I think if you have gone through the experience of purchasing or refinancing a home as a consumer, and somebody were to bring that technology to you, I would be interested, particularly because I'm not like, I chose the greatest industry to be a part of when finance is my least favorite subject, right? Like, good job, Sash. Like, way to pick mortgage. But like for me as a consumer, finance is not my thing, right? And I don't want to think about numbers and like, be calculating my PITI and all that, not right. Like I don't want to worry about that. I don't want to think about it. But at the same time, I know I should understand like what goes into my profile and why am I being, thought of one way versus another as a borrower from a risk appetite perspective. Or, I mean, some of it's common sense, obviously, but some of it does get more into the nitty gritty of finance. And I think those applications that are out there, they are newer. And I think it's going to take time for both the lender and the borrower to want to adopt it. But if we push for it and we really do help educate on why financial literacy matters and why you should understand the power of that being in your hands, so to speak, and having a little bit more control over it, I do think from a consumer perspective, I would hope they would be interested. I think it obviously needs to be marketed and applied correctly, and I don't know that it's been tested and validated enough yet, to be frank. But I think there's opportunity there. I really do.
Yeah, I think one of the key things we've already hit on in our first few episodes of Now, Next, Later is this idea that you have to decide how you're going to go to market, who your customer is in a very fundamental way, culturally process oriented way
Yeah.
to answer these questions. And I love that you came back to that because I think that that's true. I think so we're going to kind of step into what's next here. And one of the things I think that's next that is a honest moment in our industry is to determine on purchase, are you sure the consumer is your customer? I think a lot of people are deceiving themselves and saying the right things around the homeowner or the potential homeowner. And the actual customer is the real estate agent and the mortgage loan officer. That their actions, not necessarily their words, but their actions, their investments, their technology, their user experience shows that that's who my customer is. And I think some increasingly, I'm hearing some, especially mortgage company CEOs, say, oh no, my customer is the mortgage loan officer. That has come out of like the recruiting and the competitiveness, I think, of this market. But I think it's really healthy to say that because it may not be where, my consumer experience product brain goes or where I want it to go, but at least we're getting started from a place of honesty. I don't know if that resonates, but as I think about what's next, determining if I'm going directly to the consumer with an investment versus continuing to invest in mortgage loan officer tools, I think is a huge piece of this.
Yeah, it's a very thought-provoking consideration for sure. And I do think CEOs should be asking the question and they shouldn't be embarrassed if the answer for now isn't the answer that they necessarily want. Because it's just a point in time snapshot to say, okay, if I really am being honest, like you said, and I think about the experience and the technology and the handoffs and like how this process works, it's still not a great experience for the borrower, right? And there's a lot of
Mm-hmm.
handoffs and a lot of, I think I mentioned this on our last episode for the home that we're living in now. The loan officer, I've never heard from him. It's been 4.5 years since we've had this home. I've never heard, like, I've heard nothing since. He was fantastic during the process, and he did jump in and help when things got a little bit weary with the title company. But, it
Mm-hmm.
was a little bit of like bounce back and forth. And, you and I both have worked for closing software companies. I still sat at a, no offense, gross title company table that was dusty and signed papers, with a mask on during COVID. And I was like,
Yeah.
this is so counterintuitive on so many levels. I don't even know how to handle it. But it was like that was just the way that it was, right? And so, and I also got bounced around. My husband is a veteran, and so we had the opportunity to use his VA status for a VA loan, but it was a VA jumbo,
Mm-hmm.
to be honest. And a lot
Mm-hmm.
of banks don't do that. So Chase was like, sorry, we're gonna have to find you somebody else. So they found us a specialty IMB that would do it. So it wasn't a streamlined, fun process for me as a borrower. And I don't think that I know we've got considerations. You've got to be profitable as a business. The technology only does what it does. So there's nothing wrong with saying right now, maybe I'm not being as borrower centric as I would like to be. But if I want to be in the future, what changes, to your point, do I make now and next so that I can later get to? Or if I'm willing to admit that I'm a different business model, okay, fine, then I'll continue to go down that path of really feeding the loan officer what it is they need to be successful in that transaction.
That's a great point. So you made me think of a couple of things, but one in particular is when we think about, we've been talking a little bit about how to think of these things as the same from a
Mhm.
verification or data perspective. But when we think about how they're different, I think you just touched on a key point about what's next and how that's going to illuminate what's different here. And one of the big things is, what do I care about the most in each transaction? And what I always use to challenge mortgage companies to be better around the purchase transaction is the monthly payment.
Mhm.
We know from data, market research, that the number one thing consumers care about when buying a new home is the monthly payment.
Yep.
It is arguably the last thing we confirm for them prior to closing. We hold that information, it changes. I mean, we give them something, it's a good
Sure.
faith estimate of
Yeah.
maybe how we can get there. And then it changes. And it changes all the way to the end. And I just don't think that, to my point earlier about who we serve, we've not done a good job figuring out big levers to pull to bring information forward and stand by it so that the consumer has what they need or what they want
Yeah.
to be able to make a decision about that monthly payment. And we continue to use a lot of reasons why we can't do that
Yeah.
as opposed to why we should do that. Whereas in a refi, I think you already know your monthly payment. You're telling you just need to know what's my savings,
Yeah.
right?
Yeah.
And then you're done early in a refi because you're like, I'm sold. That's what I want. Just tell me what I have to sign. And so I wanted to ask you about the closing experience of what's next,
Yeah.
because from a purchase perspective, I need to know, I want to know, this is all new. Help me understand where am I going? What am I doing? From a refi, it's like, you've already sold me, just tell me where to sign. Do you
Right.
see lenders trying to get more involved in the closing experience as a result for either of these transactions? Sort of what's next as they try to hold on to the consumer in a more
Yeah.
sticky way?
Yeah. And I'm going to make a note because I do want to come back to something, but I'll answer
Okay.
that first. So I think, it's interesting when you talk to companies, and I've talked to a handful, as have you, and I've worked for at least one or two, that chose closing as the area to focus on. They say
Mhm,
it's because it's not only one of the most convoluted places in the workflow, because you have so much happening so quickly and it all has to kind of come together, the stars have to align, right? But also because it is the last moment with the borrower, at least for that transaction, right?
mhm,
And so you want that lasting impression to be positive. And often I see companies say that's the why for why we're going to try and solve for closing to be a better experience. And then lenders who say, yes, I want to invest in that, whether it's, just in making the workflow smoother or all the way to e-close solutions. I do think that they are leaned in and care. I think that this market has made it less of a priority. To be honest,
mhm,
I'm not sure that that's the right decision, but I understand why many have said,
mhm,
look, I just don't have the time or place to do that right now. But the ones who have and who are leaned in, and there are many that are actually setting themselves up, I think, immensely for success for a few reasons. One, because when the market does come back and the refis do start to come in, yes, it's a more streamlined experience, faster experience than a purchase anyway. But now you're just making it even better. And that is truly a place where you are impacting the consumer in a positive way. And at this stage, most people, unless you either don't have access to technology, and listen, my dad passed away this year and he still had a flip phone. Like, God bless him, I love him so much. He was 72 years old and he still had a
mhm.
flip phone. So there are people that, like, even though they live
Yep.
around technology, my mom has a computer and is very proficient, they're just not going to get on and sign a document online. That's not their thing. But a lot of the country is used to and comfortable with and is expecting that experience to be more automated, right? And easier and able to do it
Yep.
anywhere, not like I had to go into a title office and sign paperwork. So I think it's a good place to be looking at. And in addition to that, there's an ability to be strategic about your dwell time, especially when you can scale e-notes, which I know is still very early on and it's going to take us time to get there. But if you have higher interest right now on your loans that you're carrying for a moment and lower on your warehouse lines, yes, you can make more money by holding them for a little bit longer. But when the market flips and those rates swap, now you want to get them off your line as quickly as possible. But just having the technology in place to be able to decide, let me throttle forward or pull back, I think is a really strategic choice from a business perspective, while you're also giving the consumer a better experience. So it's like a win-win in my mind in that regard. So I do think closing technology is a great example of where there have been strides. We could still do more. A lot of lenders are leaned in. Some are a little bit more skittish and want to kind of wait and see how other things come about. Or maybe they're just, like I said on the last one, like they're focused on keeping their doors open, and this is just not something they have resources to focus on right now. And that makes sense. But yeah, those are my thoughts. What about you?
And I think that framing is exactly where at least in my career and with my clients, I try to talk a lot about adding incremental value when
Yeah.
you're making a decision. I think a lot of times, especially independent mortgage companies, will look at an e-note decision and will not consider it in the now, next, later framework. They will decide whether it makes sense for capital markets and loan delivery.
Yeah.
And QC didn't weigh in, customer experience didn't weigh in, loan officers didn't weigh in. Now, I think that's changing, but I
Mhm.
think historically it was just like, hey, does capital markets want to go to e-notes or not?
Yeah.
Without what you said, which is, wait, let's layer on. If you look at it, now you're layering on speed, consumer experience, a couple of other things about verification, fraud, and QC. And now it's a totally different decision. We're saying to do that, well, we would both recommend starting with closing, but you could do that at any of these moments as you
Yep.
think about what's next and make a better decision.
Yeah, absolutely. And I'd love to see more companies come out with additional technology more upstream, but
That's right.
for now.
To link it.
Yeah.
That's right.
Yeah. Yeah,
So
absolutely.
we have a little under 10 minutes left. I want to be cognizant of time and I want to leave some time for later. You had
Yep.
something you wanted to go back to.
I
So before we
did.
jump to later, why don't you do that?
Yeah, what I wanted to also say, and again, not ever having sat in an origination seat myself, I speak out of turn. So take that with as big a grain of salt as you would like. But I've been in the trenches around them working through implementation of technology long enough to have seen the pain that they suffer. And one of them is regulations, right? That like TRID was
Hmm.
like such a mess. And we continue to have, other regulations that come out that make life like really like a fire drill really fast. And I think that there are theories that make sense, but in application, it just never seems to like play out the way that you want it to. And I feel for a lender that has to constantly be thinking about where regulation comes into play and how they balance the weight of that against these other things we're talking about. But the one thing I will say, and this is a credit to Director Chopra, is that I feel like he is like calling it out loud at conferences of like, okay, let's have common sense, right? For once and for all, like I'm willing to admit where we may have faltered down the line and we didn't fully understand and put ourselves in your shoes. But like tell us how we can help fix this, because we don't want this to be an application failing the way that it has been. And I think they're more open-minded to hear how we can solve for what the spirit is of the regulation, and why we're trying to protect the consumer or make sure that we're fair in how we lend, et cetera. But also make it so it actually can be applied in good measure from a lender perspective, and for technology providers that help you solve some of those problems. So I did want to acknowledge, one, I get regulation makes it more complicated. And I also
Hmm.
appreciate that we have a director at CFPB now that I think understands that.
Yeah, that's a great point because I have the mental image of that meme where all the Spider-Men are pointing at each other in a
Yeah.
big circle. Like when we think about lowering closing costs or improving cost, especially to either the lender who can then lower their costs or ideally directly to the consumer, for a long time it feels like it's been that meme. What you're saying that I'm uh, really supportive of is like make cutting costs a competitive advantage.
Right.
And all of a sudden, now you have all the incentives in your organization driving at the same benefit. Until that happens, I think we're going to be stuck in the finger pointing game across real estate, mortgage, and title.
Yeah.
Throw appraisal in there as well, blah, blah, blah. But I think that meme comes to mind. But I do think cost cutting is going to become a competitive advantage. And when it does, you got to be ready. Well, now, next, later, let's spend the last 5 minutes here on later. Um, the setup that I was hoping we could talk a little bit about are like, what are the options? So if you're really projecting out, whether it's that cost cutting differentiation I just mentioned, or just differentiating yourself at all and trying to make mortgage less of a commodity, or even if it is more of an experience business, to really win. Put consumer experience aside for just a second. Like, I
Yeah.
want to win. What do I do? I think we have a couple of options when we think about purchase versus refi. So I wanted to throw some out there and get your reaction.
Sure.
But one in particular was, we talked a lot about what's the same: verification engines, how you process data. We talked a little bit about what's different, the needs of the consumer, the milestones that you mentioned. And so I was wondering if what we end up seeing is separate channels, that we end up having like a purchase channel and we have a retention channel, and the mortgage loan officers aren't the same, and that you don't actually get served back the leads unless maybe your customer asks for it. But
Yeah.
otherwise, you just have the lender you do business with as an MLO is just serving up credit offers to the consumer for refi to keep them in the family. And when they have a question or a chat, sure, we can offload you to the banker maybe that you had before. But
Yeah.
ultimately, like, it's a totally separate channel. So, like,
Yeah.
option one, how does that strike you if you're thinking about cost, if you're thinking about, making your loan officers happy? I know that's challenging. So,
Yeah.
what's your thought about option one?
Well, first and foremost, and I'm going to get so much flack for this one. Loan officers are so high maintenance. I am too, by the way, so it's okay. There's nothing wrong with it. So like, good luck making them happy. Good luck making me happy. But you know what? It's an interesting, again, you're so good at the thought-provoking statements. And the first thing that came to mind was, if you have consumer direct channel already, why wouldn't you just put it there? Right?
Mm-hmm.
Makes perfect sense. And if you don't, maybe it's an opportunity to think about, if that's something that you want to consider in the future. There go my dogs. So that's my first thought. Go ahead and comment while they bark in the background.
Sure. So I mean, I think that's how, when I think about like the big aggregators or companies that have become large by having a little bit of everything, I think often they'll have affiliates or subsidiaries that kind of like
Sure.
do operate like that. But then it's very difficult for your mid-sized company or your growing mortgage company to kind of think that way. And then I think that's also what creates pressure on banks, because if you take away some of that quote unquote easy business, loan officers will go somewhere else that doesn't. And there's this weird tension right now about how you manage talent around some of that. So I'm trying to be sensitive to that and not
That's
dismiss it, while at the same time acknowledging costs are what they are. And you can actually run, a refi subscription program. One of the things I've worked on it in various times for either project-based work as a product development person, or for clients, is this kind of like refi for life model. I don't know if
Mhm.
you've ever heard that phrase, but like
No.
everybody has this idea of a holy grail where, like, I win the business, I get your loan, and then I actually bring you into the process of, I will continually serve up valuable data about your house and your financial situation, so you can just refi whenever it's right for you. And
Yeah.
whether that's a cash out, rate and term, or HELOC HELOAN, you'll just see those. You'll see us serve up pricing. Maybe it's quarterly, maybe it's monthly, maybe it's daily. And I think people have been really afraid to just ask consumers, one, just share your information with me and get a bunch of on-demand mortgage offers whenever you want them. And I've heard from a lot of really sophisticated digital lenders, like, I don't think we can ask them. Yet, I experience in my life, Apple, Spotify,
Yeah.
Google is asking me all the time, hey, can I just
Yeah.
have your data and we'll trade, and you'll get some free stuff, you'll get some premium stuff, we'll charge your credit card whenever you decide you want something. Granted, that's $6.99, $12.99, $69.99 a month at the various like products I'm buying, not
Yeah.
$320,000, $600,000, $1 million. But like, that's another area that I see refi going to, where retention, if you're not doing programs, reward programs, value add incentive programs, offer programs, is going to become really hard.
Yeah, it's a really good point that you're making on both sides. And I think if I consider that, like as a consumer, would I want that? I say yes, but also I know, and I'm a victim of doing this myself. How often as consumers do we just say yes to something without really thinking about it, without
Hmm.
reading the fine print, right? And just say, yep, sure. So, like from a business perspective, are you probably going to make more money if you put something like that in place? Yeah, probably. From a, is it better for the consumer borrower? Oof, I don't know, right? Like I think I still would want a loan officer, like maybe some of that is managed on the front end, and then some a human still reaches out to
Hmm.
me and helps me think through that decision. And perhaps because typically a refi is going to be a bigger decision than even if it's a cash out, it's still going to be a bigger decision than most things that you buy, right? Like a
Hmm.
TV or, I got a new set of AirPods during the Prime sale day because I lose them like it's my job. Um, but I do worry a little bit about like it makes me cringe personally of like, God, like would I actually do my due diligence and pay attention, or would I just click the button and go? And that does personally scare me a little bit. So interesting to think about.
Yeah, that's why I think it's a fair question that how comfortable do I feel with my dashboard? How comfortable do I feel being given analytics that help me make that decision versus like chatting in or calling in or
Right.
connecting with somebody? And I think one of the things that I've kind of used as my later mentality is serving up sort of the right data to the right person at the right time.
Yeah.
And where you start is the now, next, later challenge that we like to throw out there every week. That's why we do this show, is to say, you got to decide who that right person is, how you're going to do that. Is it to a loan officer? Is it to a consumer? Is it to a consumer who
Right.
then talks to a loan officer? You've got to make those decisions. And that's what makes the marketplace fun. But I think that in order to challenge a lot of those longstanding beliefs, I like the idea of like putting more in front of the consumer. Right now, a lot of the feedback I'm hearing, regulatory side, consumer side, and servicer side, is there just isn't a lot of valuable data once I've set up my auto pay on my mortgage, and who's going to win that space. So I
Yeah.
think the one thought I'll leave us on the later category here, where purchase and refi are clearly different. What are you giving people once they've done their mortgage? Sasha, you're someone who just said, I haven't heard, you're in the industry and you haven't heard from your mortgage company in 4 years. So the question is like, is that a space you can trust? I think for my career, for more than a dozen years, the belief is I'll just win that business in the lead gen fight when I have to, when I know it's a lead, as opposed to trying to win that business over 3, 5 years
Yeah.
and hope or trust that they've seen enough value. But I also think that's a really risky proposition in the world we're headed towards,
Yeah.
where dashboarding, analytics, and offers can come in new ways. So that's what we'll leave you with today on Now, Next, Later. As you think about purchase refi, the data conversation from last week, coming forward into this purchase refi, what we can expect next week as a preview. Sasha and I will be back talking about what we learned in Dallas at the Housing Wire AI Summit. So you've probably already been offered 100 different AI related podcasts. What we're going to try to do is Now, Next, Later framework for AI coming out of what we heard. So it'll be different. We're going to try to bring you something you haven't heard anywhere else, but we're going to be together. We're going to learn from that. We'll use it here. And we hope that you join us. Sasha, safe travels. Thank you
Thank you.
again.
You as well. We'll see you tomorrow.
See everybody next week. See you tomorrow. Bye.
All right. Bye.